Well, it was Charles Dickens in his timeless introduction to A Tale of Two Cities who remarked on the approaching revolution in France. It was the best of times, it was the worst of times. And the current global revolution in television is starting to take some heads. Last week we saw the mutual departure of former Seven West CEO Tim Warner. Warner survived a sex scandal with his former personal assistant Amber Harrison a few years ago, but couldn't survive the bleak arithmetic of his company's numbers. There was a strategic decision made by Chairman Kerry Stokes, obviously ahead of pretty disastrous results on Tuesday this week, that it was better to have the returned prodigal son, James Warburton, in the chair to deliver the bad news. Bad they were, if expected. Seven swung to a net loss of around $445 million, compared with the profit of $134 million a year earlier. Annual revenue fell over 4% to $1.5 billion. But the real structural worry is the decline in free-to-air television business and advertising, which still underpins the Seven business. The market is equally pessimistic, with Seven's share price falling to another record low of 35 cents, following news in The Australian this week that Ryan Stokes won't be using the wealth of his company, Seven Group Holdings, to bail out the media group. Over at Nine Entertainment, it's not quite the best of times, but it's fair to say Hugh Marks has more reason to smile than his Seven counterpart. Reporting the first profit since the finalisation of the Fairfax takeover last year, Nine reported a 3% rise in profit to $216.6 million. Despite the digital newspaper and publishing business doing comparatively well, it's up about 3% in revenue. Earnings for its property listing arm, Domain, fell 15% in what is a tough real estate market. The bigger worry, again, however, is that all-important free-to-air revenue business is down 5%, which is still the elephant that drives that company even since the post-Fairfax takeover. By Nine's own admission, this will continue downward into the next year. Now, of course, Nine's answer to this is that the Nine Now, its BVOD service, or broadcasting video on demand to the uninitiated, and Stan's SVOD service, subscription on demand, will not only make up the slack, but lead to newfound rivers of gold. While Nine Now did show a very healthy 51% growth in revenue, it hasn't offset the losses in its free-to-air. And it's unclear how it will ever do that with continued costs and losses in free-to-air advertising. Hugh Marks said this week he is expecting Stan to push strongly into profitability, but without projections in terms of numbers or subscribers. One reason for this hesitation might be the fact that Disney this week announced the long-awaited arrival of their own streaming service, Disney+. Disney Plus will launch in Australia in November with an $8.99 a month offering, 35% less than Stan's $14 a month and $1 cheaper than Netflix basic package. Hugh Marks said this week he's keen to continue a deal with Disney, but the US giant has been clear, telling me this week ultimately Disney Plus will be the exclusive streaming home of content from Disney, Pixar, Marvel, Star Wars and National Geographic. It's clear Disney is pulling the plug. At last count, Australia had 9 streaming services, with Disney to make it 10. Along with Netflix, others include the likes of Amazon Prime, NBC's Universal Hayu, Foxtel Now, which also has Disney content to lose, and its successful sports streamer, Kayo Sports. Australia is not as big as Texas, in a population sense anyway, and you will almost have as many streaming services as the US soon. In a market this crowded, it's hard to see as many local and international players surviving. Still, it's viewers that are benefiting from the television revolution, with seemingly endless shows and sport and movies available for lower prices. But the quality and depth of this content is being stretched, and it will get more expensive for providers to keep up quality control. As the saying goes, content is king, but in this state of revolution, whose head will wear the crown?